let's look at the currency market. Here we have the CAD yen. This goes all the way back a year. And as you can see, the currency is respecting the 50 band and the 200 band. So it bounces off the 50 right here and goes down, hits that 200, bounces off of it, comes back, and it uses the 50 as its support level. Finally crashes through, comes back up, touches the band, it comes back down for another run, and then it's got this pattern of resolving itself once it crashes through, and then the band comes down. In order to go through the band, it's got to have this workout pattern. Now sometimes it's it's a little bit different each time, but it basically follows the same idea, where it's going to use that band as resistance, and at some point it's going to start going through it. It's going to have a little mix-up period right here. Now sometimes it'll come back down and it'll hug this, but here it wants to go higher, but guess what? You got the 200 band. Goes through the 200 actual moving average, but the top of the band, 1/4 of a standard deviation, proves to be the ultimate resistance point here. Then it comes back down, you've got a bunch of sellers, comes back up, and guess what? Touches the 200-day moving average. And then of course it's got its little market pattern, but which is noise. This right here, a lot of traders, they get confused in the direction of the market because they're not looking at the big picture, and they try to trade it too aggressively on a shorter time frame, which you can do, but if you want to stay sane, you want to step back a little bit and take a look at what is really happening. Now the concept I wanted to show you is, here you have one product, and you think, okay, well, it's only valid for one product at a time, but if you start adding products together, like you have a complex position of a bunch of different, and this is a good risk management strategy, to spread your position over different currency pairs that tend to trade in harmony. Now, they don't trade exactly, maybe one currency pair has a little different flavor to it, but if you were to diversify across several currencies, aiming at, let's say, in this case, the weakness in the yen. So let's say the odd yen right here we're going to add. We're going to add the euro yen, and then we're going to add the USD yen right here. Okay, so that's 4 different currency pairs that we've added together. Guess what? Look at that. You still have this position of 4 currency pairs added together is still obeying these bands right here. And let's look at it on a weekly right here. Okay, on a weekly it still does the same thing. And go all the way back to 2020 right here, where it tries to get above the 50, right, which it does briefly, but then it's got the 200 challenging it right here, and it's forming a ceiling. Finally breaks through, comes back, taps the 50 right here. Okay, and it's got this sometimes it goes through the bands, but it doesn't stay that way for long. If it had gone through the band like this all the way down, which it can do, you never know, but chances are it would have stopped here and then got support here. And here it's broken through right here. Now it's shifting, and you got the 50 band coming over, and you can see how it's bouncing back and forth between these two. You don't know what it's going to do. Probably it's going to get support around on the 200 band, and it's going to start heading higher, but we don't know that yet. But the concept is that these bands work not just on every product, but on combinations of products as well. So if you had actually a long position in one product, a short position in the other, you can graph those, and you'll discover that your complex position is going to observe and react to the bands just as though it was a single product. And that's basically what's happening here when you have say the NASDAQ futures right here. Okay, this is a combination of 100 stocks, and they all trade as though they were one product. That is basically the secret that we're talking about. And a lot of traders really don't understand that. And they think that every stock, has got some little thing to it, that you need to be some kind of wizard, and you got to look at all these complicated indicators that ultimately each of the indicators is feeding off of each other. It's a big echo chamber. So you're going to get whatever result that you want to see just by adding more and more indicators, and when it doesn't obey what you think it's going to do, you're just going to change your rules, add more indicators, and eventually you just run out of money. But if you just keep the indicators very simple, these two indicators right here, basic bands, all the traders are looking at the 50 and the 200. Some look at the 20, but 50 and 200 are universal. And if everybody's looking at the same thing, guess what? They're going to start reacting around the same levels. That's a phenomenon that I don't understand, but it's one of those things that happens. It's like a flock of birds. How do they change directions all at once? Maybe if you study birds forever, you might have a theory, but I really don't know. I just know that birds will change directions all at once. And if you can identify those points at which this flock of birds is going to change directions, and here I'm just showing you. If you want to just keep using 50 indicators per chart and being frustrated, that's fine with me. But if you want to keep it simple and you want to start making money consistently, just use these two bands and get to know your product. Now, there's no law that says it has to stop here, right? It could actually go lower, but that would be very unusual. So we're looking at probabilities, and it's probably going to turn here. So if you were here in 2022, right here, and the NASDAQ futures is coming down here, and you're like, oh God, should I go long or short? I don't know, everything's crashing. Well, what's the probability? What do you think is going to happen? It's at the 200. So you buy. Now, what happens if it goes down lower and starts breaking down? Okay, well, that's a once in a blue moon. Well, actually, blue moons come a little more often than you would think. But, it's like the 100-year flood, which comes every 10 years. Yeah, okay. So we're talking about probabilities.